Hello, everyone. This is Jordan. Welcome back to the Daily Gold podcast. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This is being recorded on the late morning of Monday, February 10th, 2025. And with me today, we have a great company interview for you. His returning guest, he is Ryan King of Calibre Mining. You can also call it Calibre Mining, but I like to say Calibre myself. Ryan is the VP of Corporate Development, but he is also a member of the management team at Calibre. And Ryan, before we get to that big mine that you guys are just about finished with as far as building it, let's start off and touch on your Q4 results. Because I know in Q3 of last year, 2024, you guys had a bit of a misstep. But as far as the Q4 results, it looks like you hit it out of the park.
Yeah, well, hi Jordan. Nice to see you again, and thanks for having us back on as a company to talk a little bit about what we're doing. I mean, it is exciting times right now with gold prices where they're at around $2,900 an ounce. Obviously, very exciting for a gold producer, and that's what Calibre is. It's been a growing gold producer over the last number of years. And you touched on it. We had a misstep in Q3. Basically, during the quarter, we missed expectations for the amount of gold produced for the quarter. We produced a little over 45,000 ounces of gold in Q3, which inevitably resulted in us having to revise our full year annual guidance down. So we revised to 230 to 240,000 ounces. And at the same time that we did that, we told the market that we would produce between 70 and 80,000 ounces of gold. Darren Hall, our Chief Executive Officer, who's been involved in mining operations for 30 plus years, recall that he's been with Newmont for most of his career prior to Calibre Mining. And his role there was optimizing assets. And that's what we've seen evolve over the years with our assets in Central America. But particularly with Q4, we wanted to ensure that we course corrected the issues we had in Q3. We put in some additional management to assist with that course correction. We brought in a gentleman by the name of David Schumer, who is our Chief Operating Officer. So we've been working on trying to find somebody to fill that role for quite a while. We did that. And of course, therefore, as we put out on January the 8th, we had a very strong Q4, delivered on expectations, a little over 76,000 ounces. And then at the same time, in that same press release, Jordan, we put out production guidance for the year, 230 to 280,000 ounces for full year 2025. But importantly, that does not include the new asset that you referred to, the Valentine Gold Mine in Newfoundland, Canada, which is expected to have first gold sometime during Q2 of 2025. And then we'll have a gradual ramp up to the nameplate that the phase one capacity is at. So a strong Q4, course corrected, added some people, and then put out guidance for the year. So feel very strongly that that was well received by the marketplace. Meeting or beating expectations is always a really critical thing, and we felt the impact of that in Q3.
Ryan, just a very quick follow-up. So reaching full nameplate capacity, do you have any timetable? I mean, I know you probably can't give us an exact day, but just any, month or quarter you're looking to hit that point?
Right. So you're referring to the new asset that we're developing in Canada. And so if you recall, just for the audience, the 2022 Marathon Gold feasibility study outlined a phase one and a phase two. The phase one mill was to be a 2.5 million ton per annum capacity facility. In 2029, their plan was to then evolve and go to phase two, which would bring it up to 4 million tons of capacity. So we built the facility to be about a 2.5, potentially up to a 3 million ton throughput in phase one. And so really a lot of it's going to depend on how things go during that first couple of months, Jordan, first couple of weeks, as you're putting, ore through that plant to see how the recoveries work, to ensure all the piping and plumbing and pumps are working according to design. So there is a process through that, and there can be challenges, right? There can be hurdles, but I would anticipate that, and based on Darren's guidance, that we should have a fairly methodical but slow ramp up. And I would say that very likely by the end of 2025, we'll call it sometime during Q4, likely we should be getting to that 2.5 million ton nameplate. Hopefully it can happen quicker than that, right? That's always a better outcome. But I'd like everyone to be, aware that it takes time to get to that, and not to expect us to produce what is in the feasibility study for half a year at least, which again, the feasibility study outlined about 195,000 ounces per year for the first 12 years over a 14-year reserve life. So I think, sometime during Q4, we should be getting there. Along the way, we could see some upside.
Yeah, and Ryan, this is something we talked about before, and this is not to say that you're having any trouble or issues completing the build, but I think it's important for you to just reflect upon just the difficulty of building a huge mine like this, and how sometimes the market and investors, myself included, we think it's like too easy where you could just like press a button and then all the gold is going to come out, on this day and this month. Doesn't really work that way. I know that you guys are really first class in everything you do, but maybe you could just reflect upon the difficulty of building a mine.
Absolutely. So, no, thanks for bringing that up, Jordan, because it is an important aspect for any company to acknowledge that it's not going to be perfect. As you're going through this process, you think about all the work that's been done to this point in time. Prior to Calibre acquiring this asset and taking over Marathon Gold and closing the deal in January of 2024, I believe there had been something like 350,000 meters of drilling completed to outline the mineral reserve of 2.7 million ounces of gold, and in all categories resource of 5 million ounces. So there's been a heck of a lot of work done drilling wise. And then you follow up with all the engineering work and all the design work that goes into that. And of course, we took over the asset at a stage when construction had already started. Actually, Marathon was probably about 40 to 50% through construction of the site layout, the design, the engineering. And so we coming in at a later stage than starting from scratch and having our own team and our own contractors working on this, it has its challenges. We had to go through and analyze if the capital cost is correct, right? Based on our experience and based on our contractors. We had to do a huge amount of due diligence. And we had told the market that, hey, this is going to take longer to build. The schedule is going to lead to additional capital. But also, we've identified a number of underestimation that has gone into this plan. So we would foreshadow the cost to go up. And then in May of last year, 2024, we came out with an update that said the capital had gone up about 140, 150 million Canadian dollars from what it was last reported of being. So you see, that's one of the challenges. You get this, in some cases, capital cost that increases, or you run into some sort of geotechnical issue that could result in time and capital. So absolutely, those things can happen. And we ran into a few of those things in 2024. We're fairly firm now on our initial capital cost of 744 million Canadian. That hasn't changed. We feel confident about that now because we're talking about a quarter away, Jordan, from being in a position to pour gold. I mean, just the other day, I saw mills and motors, etc., being installed and advanced inside of the plant. So we're making excellent progress. But needless to say, I mean, when you look at an engineering report like the 2022 feasibility study, you're looking at a snapshot in time based on information people had, based on the assessments they thought were reasonable. And that's now 3 years ago. So we've obviously incurred additional capital costs because of different things within the design, which has changed since then to now. We have also incurred, of course, inflationary impacts, as everyone has felt across the industry, labor, steel, components, etc. So there's all of these types of hurdles or issues that can come up. And that will be the same as we get into Q2 here, where we're expecting first gold. We're on track. We're on a path to deliver first gold in Q2. Our initial project capital is 744. That's not changed. So we feel confident about everything going forward. We've taken steps now Jordan, to ensure that we are in the best possible place from mitigating any of these uncertainties or hurdles. And one of those has been hiring a group called Reliable Controls Corporation out of Salt Lake City. This is a pre-commissioning team that come in and basically work with the construction team and work with the operating team and ensure that we pre-commission and commission all of the elements that spin and whir and are mobile to ensure that they deliver upon expectations. So taking additional steps, which of course would be additional capital that we included in our 2024 updates. So there's a number of things. I feel confident, our team feels confident, but as Darren Hall would always say, I'm confident, but I'm never comfortable. I'm always looking and asking questions about what am I missing? How are things going? What can we do differently? What are we missing that we could think about in order to mitigate additional potential risks? And, given his experience and the fact that he's built mines, he's operated mines, he's optimized mines, a very senior executive at Newmont. When he left there, he was overseeing 15,000 employees, and that probably represented 8 different mines in Asia Pacific, probably representing at that time about 40 to 45% of Newmont's EBITDA. So he's been through a lot of different aspects, particularly to the gold mining business.
Ryan, another quick follow-up. Financially, are you guys in good position to see Valentine through?
Yeah, so as we last disclosed in early January, the initial capital cost, the initial project capital cost to get to first gold was $744 million. In September of last year, I think we put out an update saying that we've got 197 million Canadian to go to get to first gold. Okay, so and I can't recall the number at that time, but I think it was north of 200 million US. And now I'm mixing currencies, so it's a bit challenging. But at the end of 2024, Calibre had 186 million in cash and restricted cash. Restricted cash is the debt proceeds account that we have set up with Sprott Resource Lending for the Valentine project build. Okay, so we've got 131 million in cash. We've got a little over $50 million in that restricted cash account, restricted debt proceeds account for the Valentine project. And if you look back, we've been spending approximately 25 to 30 million Canadian a month developing the Valentine and constructing the Valentine. So if you put that together and you put the fact that we had approximately 200 million at the end of Q3 of last year, there's a bit of a slowdown during the Christmas season in December. So you use a 20 to 30 million dollar per month burn, you're getting close to $100 million that is required to get to first gold. Of course, here we are sitting at 186 million US. And also, let's not forget, and we don't really drive this home enough, is that Calibre's generating revenue, right? And especially at these current gold prices, we're in a fantastic position because, our guidance this year was 230 to 280,000 ounces full year for current operations, not including Valentine. So not only are we, have a good cash and restricted cash position, we also have cash flow from operation. So yes, we're in a very good position.
Ryan, before we talk about the new discovery that you've made at Valentine, tell me about phase 2, because as you noted earlier, in the mine plan, phase 2 comes about in 2029, but you guys have actually been working on part of that, I think, with the initial build. And so you've decided to pull phase 2 forward. So can you tell us about that and why you made that decision to pull it forward in the mine plan?
Right. No, absolutely. After some fairly thorough analysis by members of our team, Darren included, looking at the mill, the expansion capacity of the existing mill. Recall that we came in 50% through construction. So foundations and footings, et cetera, had already been put in place. If we had started this from the beginning and there was nothing there, we may have likely designed a different size of plant, larger plant. That being said, we're in the position that we are. So the team analyzed, can it go higher in terms of its mine to mill throughput, really what we're looking at. So in the study that was done, the technical report from 2022, it showed a phase one of 2.5 million tons going to 4 million tons of annual throughput through the plant to generate that almost 200,000 ounce a year gold production profile. So after looking at that, Darren and the team said, well, it looks like there's optionality to bring it up to a throughput of 5 to maybe 5.4 million tons of throughput. And what they've looked at is putting in secondary crushing, which was not part of the design, which is actually how, a simple old school plant would have done it, would have put in single stage crushing and then second stage crushing to help with throughput. So after doing that review, and I'll say that the guys are still doing all the engineering, the detailed engineering, the finalization if this could work. But we've talked about the potential that, yes, we see potential to go to 5.4 and sooner than potentially, sooner is it's expected to be sooner than what the technical report stated. And that's because we're in a position from a financial position to be able to do that hopefully without any further dilution to our shareholders, because we are generating good cash, we'll be increasing production, generating additional cash with the inclusion of Valentine, putting us in a position that we can, start to, with the financial flexibility that we'll then have, to then look at adding that sooner. It's going to require us going to our board and asking for additional capital to do that. But I think we're in a great position to be able to do that and potentially start construction of that in 2026, and then look at having that gradually ramp up to that phase 2 full capacity by potentially 2027. So yeah, no, it's very exciting because that, leads itself to 25% more throughput than what was envisioned in the phase 2 of the study, could lead to almost the same amount in metal production.
Yeah, that's really fantastic. Ryan, let's talk about exploration. Yeah, first, just exploration at Valentine, because I know late last year you guys announced you made a new discovery at Valentine. This was completely outside the resources. This wasn't just a little tiny discovery. We hear about various companies, they hit a speck of gold here and there. They say it's a big discovery, but there were some real significant intercepts in this news release. Tell us about the significance of this discovery and what it means for investors.
It's a critical aspect of any mining company is reinvesting back into the assets and reinvesting back into development, reinvesting back into exploration. It's like research and development for a biotech company. You've got to continuously reinvest into the product to look at sustainability for the future. And, as I say, mining is a business that we are always depleting future revenues. We're always depleting that future revenue. You can't just have it sit in the ground. We're always mining it and we're depleting the future. So if we don't take some of that capital and reinvest it back into drilling, additional exploration or organic growth, well, then we've got to pivot and start looking towards acquisitions or mergers, which may be part of a segue to a discussion we had. But the significance of the discovery that was found is broad. It has great potential. And I say that because, and I'm not a geologist, but being around a lot of geologists and their levels of excitement, as well as our lead director, Douglas Forrester, who's been involved with numerous discoveries, mergers, acquisitions. He is an economic geologist who knows what he's looking for. Everybody's quite excited about this because of the broad widths of mineralization. So keep in mind that Calibre acquired the Valentine Gold asset in January of 2024. We started to immediately do some level of exploration work on the property, but again, the focus was construction, ensuring costs, all of those types of things. But we started with a small exploration program in 2024, which led to the discovery of some mineralization to the southwest of our southernmost pit. So this is a 3-pit mine plan. The southernmost pit is Leprechaun, the middle is Berry, and the furthest is called Marathon. So within that Leprechaun pit, we discovered more mineralization. I think we actually hit 5 meters of 46 grams per ton gold, as announced in February of last year, which led to, well, this is new. What does that mean? Which which then led to additional exploration programs. And by November of within the first year, within the first 12 months of owning the asset, we intercepted 172 meters, grading 2.4 grams per ton gold. We intercepted, I think, 78 meters of 2 grams per ton gold, and about 95 meters of 2 grams per ton gold. So those three holes were the discovery holes of this kind of broad zone of mineralization. Now, it did start about 200 to 225 meters below surface, so it's deeper, but that also is early. That's where this was discovered. There's nothing to say geologically that it's cut off from coming to surface. We just don't know. In fact, there's high-grade grab samples and rock samples on surface that give us a better indication that, hey, this probably does at some point in time somewhere come to surface. So, and that zone was discovered 1 kilometer, right, 1,000 meters south of the Leprechaun pit. And in between there's been very minimal drilling, almost no drilling. So that's why the team is quite excited. Potentially, could this Leprechaun connect to this new drilling? Remains to be seen. But we've got 2 rigs operating there now. And if you step back, Jordan, what it tells us is that 350,000 meters of drilling that Marathon Gold did prior to Calibre, only about 10% of that drilling was earmarked for pure exploration and discovery, right? Majority of that was for delineation to understand the resource geometries and content of that metal. So you think about that, and you think about the Valentine property that we have. It's a 250 square kilometer property, but the signature is the Valentine Lake Shear Zone, which is a massive fault that goes through the property. It's 32 kilometers long, and so far, resources have only been discovered about 7 kilometers of that 32, predominantly because that's what's been explored. And a little known fact, Leprechaun was discovered in 2010. Marathon was then discovered in 2015, and that was because they both outcropped a little bit at surface. The team at Marathon then said, okay, we've got these 2 deposits. Looks like we have a mine. So let's do condemnation drilling. And they went between the 2, did condemnation drilling. Guess what? They discovered Berry, which was under some cover, a little bit of cover. They discovered a 3rd deposit on widely spaced condemnation drilling. And condemnation drilling is just drilling to see where they should put the facilities in order to mine the pits. Well, they discovered another pit. So that tells us, hey, there's a lot of upside potential beyond these 3-pit mine plan across this whole 32 kilometers. So that's why everyone is really excited. And that's why this year we're doing the largest pure exploration, so resource expansion and discovery drilling program this property has ever seen.
And yeah, apologies if I missed it. Another very quick follow-up. Have you budgeted an amount of capital in meters for the drilling at Valentine this year?
Well, the initial budget is 15 million US to 20 million US for the program. I mean, we all expect that'll probably expand to larger programs, but we've got to do this in a bit of a staged approach. So if you think about right now, it is very busy at the site. And it's busy because accommodations are full of contractors and consultants completing the build. Now, it's also difficult to house more people for exploration, but currently we have 2 drill rigs operating there. And it's a capacity issue in terms of people. So we have to make sure we focus on what we told the market we would deliver, and that's Valentine first gold by Q2. I would expect that as we get through Q1 and Q2, very likely we'll see a ramp up of drilling. And I think we'll be beyond the 20 million US that we've planned for. And keep in mind, this is all part of our budget. This is financed through treasury as well as cash flow that we have generating from the operations. And that's Valentine, right? In Nicaragua, we anticipate to do $20 to $25 million of drilling. In Nevada, we are planning to do $5 to $10 million of drilling. So this year is the largest. I think we're over 200,000 meters of drilling earmarked for across all the assets in the portfolio. So it goes to say that we're very focused on the sustainability of our operations and also the excitement because we see geological potential in the portfolio.
I'm glad you mentioned Nicaragua because it's a good segue. I wanted to get to that. Yeah, tell us about Nicaragua. What you're looking for from that this year, and as well as the exploration potential that you still see.
Mhm, mhm. Right. So, as a quick reminder, in Nicaragua, Calibre operates a hub and spoke operating strategy. So, we have two mills that are separated by about 250 kilometers of paved Pan American highways. We've got the Libertad mill to the south. We've got the Limon mill in the north. Limon is a 500,000 ton per annum facility. Libertad is a 2.3 million ton per annum facility. We utilize both. We generally fill the Limon mill, and we probably use 50-60% of the Libertad facility. And that facility is filled with that capacity by material we find on the property. So we've got a little bit we've got two mines. We've got an underground mine and a smaller open pit mine on Libertad's property where the mill is. But other material gets hauled from Limon, or it gets hauled from our other asset, Eastern Barossa. And that goes into either one of the facilities, but predominantly right now it's going into Libertad. So this year we've guided the market 200 to 250,000 ounces from Nicaragua, again, utilizing the hub and spoke approach. But what's important is we have now permitted, I believe it's 4 different deposits for mining and extraction. So we've got a track record of delivering. Year over year, we've actually increased gold production approximately 20%. And I think it's important to go back to Q4 of 2019 when we acquired the assets and partnered with B2Gold. Because when we did that deal, we had 140,000 ounces in reserves amongst the assets. Now you step back and you go, the company has consistently invested in exploration year over year. And because of that, and because of the implementation of a hub and spoke strategy, we've grown from 140,000 ounces in reserve to, at the end of 2023, we've got 1.1 million ounces at 5 grams is the average reserve grade. So, and also we just put out not too long ago that we've just produced our 1 millionth ounce of gold for Nicaragua. So we've not only mined that much, but we've also kept pace and increased the amount of reserves in the ground. So it's a really compelling story. And I think in mineral concessions across the country, we've got probably anywhere from, I can't remember the exact number, it's about 12 or 13% of the overall landmass of Nicaragua under mineral concession. And that's because we have, as we continue various grassroots and advanced projects through the pipeline, we know that if we do discover something, following the path that we've done, just like any international company would do through permitting processes, we do exactly that. And we can go from basically discovery through to delivering ore to the plant, self-funded through cash flow, and get that done in about 18 to 24 months from discovery through delineation, permitting. Assuming everything works well from a social aspect, which so far, because of the work our great team has done from a inclusion and transparency perspective and environmental stewardship, we've been very successful in doing that. So it presents that opportunity to utilize that additional surplus milling capacity at Libertad. Right, as I mentioned, we've got probably 50% capacity available. And so we continue to invest across the country, and that has worked very well. The hub and spoke has worked well. The reinvestment back into the assets has demonstrated the increase in reserves and resources. And I believe that we will continue to do that and year over year discover new areas. They may not be huge, right? You're talking like maybe it's 50 to 600,000 ounces like we just put out at the Talavera underground inferred resource. But there's good potential. There's a very solid geological setting there, and we have been successful. I mean, you look at the Limon asset, it has produced over 5 million ounces of gold, and yet we continue to find new zones of gold mineralization across the property. So very prospective, and as long as we focus, deliver, and put in the right controls in place to manage expectations, but also to deliver on what we said we were going to do, I think this is going to be a continuously successful business.
And Ryan, finally, tell me about Nevada. I think I recall you said a $5 to $10 million budget there as far as exploration. Uh, What exactly are you hoping to achieve in Nevada?
Right. Yeah. So of course, Nevada would be, well, it is the smallest producing asset and jurisdiction in the portfolio. I think this year we've guided 30 to 40,000 ounces of gold production and a little higher cost than Nicaragua. It's a lower grade, large, dirt moving open pit heap leach operation, right? So we're getting 70 to 75% recoveries on the heap. I think we're mining about 0.35 to zero point 0.4 grams per ton gold at a 2-to-1 strip ratio, right? So it's not a it's not one of these assets that everyone would rush towards, right? And say this is the most amazing thing. That being said, we have production with a margin, and we continue to invest in exploration because Nevada's obviously been a tier one mining jurisdiction for a long, long time because of the geological setting and because of the mining framework or legislative framework to advance assets through to production level. And you see all the large major companies are there, Kinross, Barrick, Newmont, etc. The exploration potential there is vast. We also have, so the main producing asset is called Pan. We've actually increased reserves 50% as of the end of 2023 since we acquired the asset. But importantly, we've got a second asset that's located about 15 kilometers away from Pan, and there could be some synergies there, right? We've been working on permitting that asset. There's an oxide deposit there that we think that could have some synergies with Pan. So we're working through technical studies to see, could you mine and extract oxide ore from gold rock and bring it over to Pan and have it be processed there. So we're working through some technical studies there. We're also working through the permitting of that. We'll call it a mini hub and spoke. So we're analyzing all those details now. We don't want to get too ahead of ourselves, but again, the focus right now has been the delivery of Valentine, and that's where, of course, most of the capital has been going because that will be a cornerstone key asset for the business.
It, okay, Ryan, before we close here, just want to, I mean, I know you talk to many investors. Let's just presume the listeners and viewers of this interview, they don't know about Calibre. They're coming across it. It sounds good to them. But they look at the chart and the stock has performed really well, which is a good thing. You want that. But they look at a chart and they say, I think this has gone up too much. I probably missed it. How would you respond to someone like that?
Well, I guess, I mean, we kind of talked a little bit about this. I mean, the chart well, the stock has done well. There's no doubt. And here we are in an environment where the gold price has been going up. We have been putting out consistent news talking about, as we just discussed, record Q4, solid guidance for gold production in 2025, the inclusion of another asset that will increase that gold production outlook for 2025 and beyond. And so graduating, we'll call it from a junior gold producer, somewhere that's 0 to 250,000 ounces to a mid-tier gold producer, which likely gets better valuations based on what we're seeing in the market, which would be a 250, call it, to a 500, maybe 550, 600,000 ounce a year gold producer would be the mid-tier status. And so I guess I would have to say, step back, take a look at the landscape. Do you believe that we're in a bull market for gold, right? As an investor, am I sitting back, I'm going, man, the gold price has gone up tremendously. Oh, what is it? Over 12% year to date in 2025. It also went up over 25% in 2024. Doesn't matter what equity I jump into. I mean, it seems like they're all hitting kind of close to all-time highs. So have I missed this? So you have to ask yourself what your view is in the underlying commodity, because that's going to help dictate where likely an equity will trade. If gold price dropped $1,000 right now, and guess what? Most of the gold equities would probably come down. Okay. So my suggestion to people is just sit back, take a look, do some research, see what you're comfortable with, put it on the watch list and see what happens. And or maybe it's, you know what, I believe the gold's going higher. And, here's an example. In 2024, I Am Gold, I Am Gold was a company that's, producing hundreds of thousands of ounces of gold a year. They're the mid-tier plus status. And last year, at the end of Q1, early Q2, they delivered a new cornerstone asset, very similar to what Calibre's working on this year, right, with the Valentine. They delivered and had first gold from the Côté Gold Mine in Ontario. Well, following that, their equity price did very well. Their equity price went up 125% through 2024. So I don't know what's going to happen with the gold price. I'm fairly constructive on it. I think that at some point in time, we'll probably have a pullback, but it likely goes higher due to all the various macro events that are happening. And if you look at I Am Gold and you say, well, could Calibre go through something similar if they're successful delivering? Yes, there will be hurdles, but if they're successful, could they? Yeah, they probably could. There's potential for that. I'm not saying there's potential for that kind of return, but there's potential for potentially a re-rate, right? So it's a complex discussion, right? But those are the kind of answers, and that's how I would discuss it with somebody looking at the company for the first time: is take a look, read some of the information, get to know who we are, but also know that it's worthwhile putting on a watch list because we've seen a trajectory here, and at some point in time, it's very likely that companies pull back. That's natural, which may present your opportunity.
Yeah, I would agree, Ryan. And okay, as we close here, for our listeners and viewers, if they would like to learn more about Calibre, where can they get more information and how can they contact you personally?
Sure. Of course, I think probably a great repository of information is our website, right? We have all the news releases. We have all of our different investor presentations with different events that we host. We will be hosting a Q4 and a full year conference call coming up, which is fairly typical. We do one every quarter for the results from the quarter and how things are progressing. So we will do that on February the 20th. You can find information about that on our website. Look at the news releases, look at the investor presentation on the website, but also absolutely just contact me directly. You can contact me by email, rking@calibremining.com, and it's RE, so calibremining.com. And you can find contact details for my phone number on the website as well. So happy to entertain discussions about how the business is going, what's happening, and provide you information and data on the business.
Ryan, thank you so much for that thorough update today. Really appreciate it. And let's see if we can do this again in a couple months and we can talk when Valentine is spitting out its first few ounces.
I hope to have that opportunity pretty soon. And you're right. I mean, things are happening fairly quickly here, so it's good to have regular touch points and updates. And look forward to the next discussion, Jordan. Thanks very much.